center, main news, the sell-off, and it continues. Let's bring in David Strzeski. He's joining us as our market watcher of the morning. How much further do we have to go down to find the bottom for this market, David?
Well, what a great question, Stuart, and thank you for having me on. It tends to be that when we see a recession begin, that we're going to see a good down and then followed by a couple of additional downs that might get people faking out, and we, have the famous dead cat bounces. So, we've been looking at this. We've been expecting to see more downward pressure, as there's just not been a lot of great sentiment in the market right now. So I'd say that we're looking at another 15-20%. If, just depending on what needs to ultimately get cleaned up. There's just obviously so many moving parts today, as you just noted in your previous segment, that it's difficult to forecast in a time frame where there's just so much uncertainty right now.
But you're looking at another 10 or 20% down from where we are now. I just want to get this right here, because that's quite a prediction. That's a very strong sell-off still to come.
That is a very strong sell-off still to come. And I think your previous guest had it really right, noting the mortgage rate changes. This is a thing that we've not really seen come out in our conversation yet. And that is, if we go from a 3% to a 6% mortgage, each 1% is a 1% or 10% loss in our buying power. We're purchasing a mortgage as a payment, right? And so 1/3 of America's income can afford a payment. America's getting priced out of the market right now, in an interest rising environment. Is going to slow that down significantly, because a $500,000 median loan before can only do $350 today.
So what should I do with my money? Keep it in cash and don't touch the stock market with a 10-foot pole?
That's a good question. I think cash is very important today, as you need to look at least at short to mid-term expenses, specifically those that are entering retirement here. We need to be also considering, where do we go right now if interest rates are rising? The bond market today is seeing some challenges, because this interest rate rising environment has a seesaw effect relating to bonds. So we're seeing big downturns right now in that, and of course larger expectations that the Federal Reserve is going to increase rates at this higher clip. Now, maybe not at 0.75, but they literally forecast and told us we're not going to ever do 0.75, and here we are today at a 0.75 increase. So we're looking at rates up, we're looking at the bonds up. There's challenges in the stock market, and so I'm seeing all three of those kind of have this convergence place right now. So it's a little bit scary out there to identify, where do we go, what do we do?
Okay, cash is king as far as I'm concerned, and you too, I think, David. Thanks for joining us, David. Perfect positioning right at the top of the 10 o'clock hour as we're selling off. David, thanks a lot.